Hi everyone, welcome to A1 POA, your guide to mastering accounting concepts. For today, we will be covering this topic, corrections of errors. Let's go! First and foremost, learning objective, in short, LO. We have the first one, understand the limitations of the trial balance. Recognize why a balanced trial balance does not guarantee accuracy. So the keyword here is balance, right? And the why. A balanced trial balance whereby the debit side equals to the credit side, not necessarily guarantee accuracy. And then this is where a lot of students fall into the trap or the impression that once my balance, my TB balance, I don't need to go and check. Next, identifying and classifying errors not reviewed by the trial balance. So in order to establish this particular LO, right, we need to know what are the types of errors that we are talking about. So first and foremost, we have omission, we have commission, principal, compensating error, and complete reversal. And more importantly is that besides being able to understand the various types of all these errors, right, we have to be able to provide example and able to articulate how this example fill in the definition of all these types of error. Number 3, correct errors involving wrong amount. So now once you are able to identify all these specific types of errors, how do you go about doing the proper adjustment? So with that in mind, right, we have 3.1 whereby step number 1, identifying errors, of course involving the wrong amount, quantify whether it is overstated by how much or understated by how much. And therefore, with that in mind, after you quantify accordingly already, this is where you will be able to pass the proper adjustment entry with the end state outcome of correcting the error. So with that in mind, let us now zoom into the next slide, which is more in depth on LO1. Understands the limitations of the trial balance. LO 1.1, recognize why a balanced trial balance, for example, debit 9K and credit 9K, does not guarantee accuracy. Limitation of the trial balance. A TB checks the arithmetic accuracy of the ledger account, meaning it ensures the total debits equal total credit. However, trial balance does not guarantee that the accounts are correct. So, for example, if the answer at the end of the day, debit is 10K, credit is 10K, but the student ended up deriving at the total debit balances of 9K and equal to the total credit of 9K, this will be wrong. Now, in terms of the magnitude of how wrong it can be, it is very difficult to quantify. It can be many error, or it can be just one careless mistake, one error, two error. Whether you have many mistakes or whether you have just one or two mistakes, probably your trial balance is still going to balance. So this is where we need to dive in a little bit further to understand. So with that, let us go to LO 1.1. In specific on all these cases. Cases number 1, wrong account being used, right? Wrong account being used. You are supposed to use an asset account, but ended up using expenses account, right? So this is wrong, this is right. So wrong account being used. So you'll still be able to balance. But again, is that fundamentally as a whole, your account will not be right. Next, wrong amount recorded on both sides. So let's say, for example, your debit and credit, it can be a eyesight error, right? Whereby supposed to be $80, but you recorded as $60. So if that is the case, right, then of course your balance on both sides, trial balance will be tally, but overall your account will be still wrong. Next, number 3, entry completely left out. So you omitted your entry. Supposedly you have 5 entry, but you only recorded 4 entry. Yep. So one entry is being omitted, one entry is being missed out, and then this is where you will not be able to get the complete correct accounts. Thereafter, right, entry recorded twice. You have already recorded it, but you record again. So typically when that happens, right, 5 entry, but you recorded in total 6 entries. So it is highly likely that there's 1 times duplicate entry. Next. So we will elaborate more on this when we go into the specific topic pertaining to reversal of entry. So you will be able to have a better appreciation of the mechanism behind this error. Therefore, while the trial balance is useful, it does not ensure accuracy of the transactions or final profit. Instead of a profit, the outcome after the students derive the trial balance, the profit might be understated or overstated. So with that, let us now go into LO2. Identifying and classifying errors not reviewed by trial balance. So at this juncture, we are going to zoom in and to give classic example of every individual error. LO2.1, understand errors such as omission, commission, principal, compensating error, complete reversal, right? So this one, we are going to elaborate more on that. And of course, to provide example. So these are the error that will not be reviewed by the trial balance. These are the error that will not and it do not affect the equality of total debit and credit. So the trial balance still balance. Let us now look at the first type. Once again, errors of omission. A transaction is completely left out. So let's say for example, a credit sales of $500 was not recorded at all. So typically sales, you would have credit sales and you would have a cash sales. So sometimes the accountants or the bookkeeper, they will record cash, right? Because it is on the basis of cash on delivery payment terms, record on the spot. So let me give you an example. It's just like for B2C business, business to consumer, meaning that you have a POS systems, your customer, your walk-in customer come in, buy a grocery or maybe a clothing from you. Maybe you sell clothes. And when you receive the cash, in return, you pass the goods to your consumer and the POS systems would have recorded the transactions instantly. But for credit sales, sometimes you forget to record because it don't happen on the real-time basis because you give customer credit term. And when you give customer credit term, you deliver the goods to your customer 1 month later, then he pay you. And probably you would have forgotten to record that specific transaction on the day you deliver the goods to your customer. So this is a classic example of error of omission. With that, let us now take a look at the next type of error. So for error of commission, the correct amount entered in the wrong account of the same type. So let's say for example, we have 2 supplier. We have a supplier A, his name is Ben, and we have supplier B. Supplier B, his name is Benji. You can see that both supplier, their name are very similar, but of course supplier B, his name comes with additional 2 letter, which is JI. So guess what? What will be the consequences? So let us analyze slowly. For Ben, the physical cash, right, would have been paid to Ben. Ben will record at his end. But you record the payment to Benji. And guess what? Benji didn't sell to you. Benji didn't sell to you. Probably for that particular month of the particular year. So you as an accountant, probably in the next following period, when you run through the amount owing to supplier, basically you will look at your books of account, right? You look at your accounting system and you will realize that in that sense, right? You will realize that, I didn't pay Ben, and therefore you will pay Ben. And if you pay Ben, this will trigger this thing called the double payment, right? Ben might get back to you, says that you accidentally make double payment to him, or he might not, right? So remember, error of commission, it is something that it might happen sometimes due to whatever reason. In this instance, the names are very similar, but again, we have to be careful. Next, we have error of principle. Error of principle. So what exactly this error is all about? The correct amount entered in the wrong class of account. So in this instance, as I mentioned in the earlier slide, you purchase the equipment, maybe 50K, but you record it as expenses. When you record it as expenses, what is going to happen is that your profit will be understated and your asset will be understated as well, right? So that will be the consequences as a result of treating purchases of equipment as an expenses, or it can be vice versa, right? Expenses treated as purchase of equipment. So with that, let us now go into the next error. The next error will be errors of original entry. So exactly what is this error all about? Over here, it says that wrong account enter on both debit and credit side. In this instance, right, again it can be a typo error. A 750 sales recorded as 570 in both account. So maybe the bookkeeper key too fast, right? 750, but in the midst of keying in, the figures sequence are wrong. 570 in both account. But in actual fact, it is 750. So you can see that there's a differences. If you use 750 and you minus 570, right? These differences will lead to inaccuracy of the account, even though your debit and credit will be equal because you have picked up the same amount on both sides, but that amount are the wrong amount, right? Resulting in the differences. For this particular error, it is known as error of reversal entry. So exactly what's this all about? Over here, it says that double entry made on the correct account and probably the correct amount as well, right? But so accidentally. So in this instance over here, we will presume that these two are the account. We have two accounts here, sales and cash. So typically when you incur a sales transaction, you recognize the sales, right? Upon the delivery of the goods and services to the customer. In return, the customer pay you. You debit cash, your cash in the bank increase, of which your current asset increase, therefore you debit. And then after that, you have credit, sales, recognitions of the revenue for the company, trade revenue. So this is where you enter the transactions. But in this instant, the amount is correct, the account correctly selected. But in this instant, what happens over here is that instead of debit cash and credit sales, the bookkeeper or the accountant did this. Debit sales and credit cash. So in this instant over here, this is definitely an error, right? Because you're supposed to increase sales, but now you actually reduce the sales instead of increasing. Same thing, you're supposed to increase the cash in a bank ledger, but now you go and decrease. So subsequently, when it comes to bank reconciliations, you're going to have some problem trying to reconcile because of this specific error. With that, let us go to the next one. Next, we have compensating error. The word itself, compensating error, would have tell you that at the end of the day, the net effect is the same, but that doesn't mean that the accounts are correct as a whole, because this account called the purchase account versus this account called the wages account would have been stated wrongly. as in the sense that this one would have been understated based on this example, right? Understated by $100. This one will be overstated by $100. So purchases understated by $100 and wages overstated by $100. When you look at it, right, understated of $100 for the purchases and the overstated of a wages of $100, these two as a whole will give you a net effect of 0. So it compensates against one another. So this is another error whereby your TB wouldn't be able to pick it up. So in short, these errors do not affect the trial balance, but they affect profit, asset, liabilities, or all three. Yep. So in a nutshell, it will affect profit, asset, liability. It will affect this one, or all of the three. It will affect as well. Yep. So with that, let us now go to LO3. Now you have already equipped with the necessary skill set of identifying the errors, understanding the various type of error, and able to give the specific example and understand why this error do not affect the debit and the credit in terms of the balancing. We want to equip you with the adjustment skill set under LO3. Correct error involving the wrong amount. So over here, we have error in amount, correcting entry. This occurs when the wrong account is recorded in one of the accounts. For example, a cash purchase of 480 was recorded as 840 in the purchase account. So you can see that once again, in the midst of keying in, 480 swap and become 840, right? So the correct amount less of the incorrect amount, you would have differences here due to the manual error. So purchases are overstated by $360 in this instance because 480 was recorded in the purchases account instead of a lower amount, which is the actual one, 480. So how do we go about doing it? So in this instance over here, you can see on start, debit and credit, right? On start, let us see the values that was recorded is 840. So it can be cash, it can be accounts payable over here. And then over here, we assume that they didn't capitalize it because it is not purchases of asset. It is probably purchases of inventory. So in this instance over here, we know that the differences that we need to adjust in order to be able to get the correct account amount will be to reduce because these two accounts are overstated. And therefore, in order to do so, we have to do the reversal. So the value in this instance will be 360 over here. Purchases account, we over debited by 360. So now we need to bring it down and therefore we will credit purchases account. And the flip side of it is, of course, we will debit cash or accounts payable, right? Based on the assumption whether you pay on the spot, cash on delivery, or there's a credit term that was being granted by the supplier or the AP, the accounts payable. So therefore, on start, the wrong entry over credited by 360. So this is where now you need to reduce it and therefore you will debit cash or accounts payable 360 here. Yep. So that's how you go about correcting it. Next, we are more or less done for LO123. Let us sharpen our skill set. Let us now instill certainty through practice. Let's test your knowledge. Recognize why a trial balance does not guarantee accuracy. Why it does not guarantee accuracy. So A, it check only the arithmetic accuracy of sales and purchases. Not true, huh? In the TB, you have many account, right? You have many account. You have the expenses account, you have the asset account, you have the liability account, so on and so forth. And therefore, this will not be the correct option, right? Because here it says that it only check the accuracy of sales and purchases, which is wrong. Next, it checked only the arithmetic accuracy of double entry. Seems to be the case, right? Seems to be the case, but let us double confirm with the rest. C, it provides the accuracy of the final profit figure. So this is wrong. Why? Because if your profit is understated or overstated due to the omission or double recording, you wouldn't be able to tell from the TB. Next, it ensures that no expenses has been missed. Again, is that this is wrong because it can't ensure that, right? It can't ensure that. If you omitted to record the expenses account, you will still be able to get your TB balance, and therefore the answer must be B. B. It check only the arithmetic accuracy of double entry, whereby your debit side and your credit side, the values will be the same. The next question. The next question asking identifying the types of errors that the trial balance cannot detect. So over here, it is a credit transaction and revenue expenditure. It is a cash transaction and revenue expenditure. It is a cash transaction and capital expenditure. And of course, it is a credit transaction and capital expenditure. So the options look very similar. So in order to really appreciate, let us now scrutinize the question itself. Which statement is true regarding the nature of the following transactions? Purchase a machine for 15,000 and pay for it by check. So in this instance here, you purchase a machine, you capitalize the machine, 15,000, and you pay by cash or check. Check, let's say bank, right? Cash at bank, 15,000. It is a credit transaction and revenue expenditure. Now, in this instance, you know that on start, this is a cash transaction. It is a cash transaction because at any point of time within the sentences itself, right, as part of the information provided, it didn't tell you that credit terms have been granted by the machine seller, right? So in this instance, you pay the cash at bank, probably via gyro transfer or PayNow or PayLah. In this instance, of course, on the assumption that the limit are allowable, or you issue a check. So out of the four options, you can see that in this instance, A and D will not be applicable because A and D is basically telling you that it is a credit transaction whereby the supplier give you credit terms granted by supplier. So therefore, we only left the two options, which is B and C. So for B, it is a cash transaction, yes, correct. And revenue expenditure. Now, revenue expenditures in this instance over here, right? Revenue expenditure, it is telling you that it is the expenses. But again, is that for huge purchases of values of 15,000 for sure, it is material value, right? It is material value. Material values as in it is a significant amount. So if it is a significant amount, we want to make sure that we capitalize it as an asset, and therefore it cannot be a revenue expenditure. So therefore, the answer it is going to be C. It is a cash transaction and it is of a capital expenditure nature, right? Based on what we have learned previously. So answer will be C. Next, we come to the next question, still under LO3. Identify errors involving wrong amount and provide analysis if it is overstated or understated. As follows, a cash receipt of 210 was wrongly recorded in the trade receivable as 120. So debit trade receivable 120 instead of the correct one, which is 210. What is the amount of the error and its effect on the trade receivable? So a quick one, 120 and 210. The differences will be, of course, $90, right? $90. So in this instance over here, rightfully, the accountants need to record a receipt of 210 from the customer. But in the books of account, only $120 was recorded, and therefore there is a differences of $90 which had been paid by the customer but still showing as amount due from the customer, right? So as a result of that, the question then asks, what is the effect on the trade receivable balances, the effect whether it is overstated or whether it is understated. So let us break down into two parts. The first part will be the differences in terms of the effect. We know that it's $90. Let us put aside whether it is understated or overstated. We know that C and D will not be the correct answer because C and D basically add up 210 and 120, right? And it doesn't make sense to add up. And therefore, the answer it should be between A and B. So let us now take a look. If we, the bookkeeper, record a lesser amount of receipt from customer, in our books of account, we still have this overdue amount of $90 owing from the customer, right? And therefore, when this happened, it is correct to say that $90 would have been overstated because in actual fact, customer have already paid you the full amount of 210. And therefore, A, $90 understated, this will be the wrong choice. And therefore, the correct answer will be B, whereby $90 overstated, meaning that in your books of account, over here, account receivable still show $90 owing by customer, which essentially this is not the case, right? So answer will be B. Next, we comes to 3.2 LO. So over here, question asks, the debit side of the purchase account was found to be undercast, total too low by $40. Assuming a suspend account has been opened, which journal entry is required to correct this error? So once again, let us look at the keyword. Purchase account, okay, found to be undercast, right? Fall short by $40. Maybe calculator calculate too fast and ended up undercast, like $40. Assuming a suspend account has been opened, which journal entry is required to correct this error over here? So in this instance over here, what do we have? We have a purchase account over here and we have a suspend account over here. So if the purchase account is undercast by $40, we have to debit purchases, right? And if we have to debit purchases account, the flip side of it is, of course, it must be a suspend account, right? Because purchases itself, it is of a debit nature. And therefore, when we look at A, B, C, D, right, let us eliminate those option that is very clear cut. It is a wrong option. So the fact that just now we mentioned that purchases we need to debit because we need to top up the shortfall of $40 because it is undercast, total too low. And therefore, when you look at the four choices, right, you realize that A is wrong because A talk about credit purchases. So that is wrong. B is also wrong because B talk about credit purchases. So therefore, it is wrong as well. So now left only C and D. C and D. So C, of course, debit purchases. Okay, this is correct. And D, debit purchases account is also correct. But over here it says that for C, the values involved is $40, whereas for D, the values involved is $80. So remember, when we say that purchase accounts, in this instance, the main account, it is understated by $40. We need to level up to the correct amount by topping up $40. So purchases is of a debit nature, so we debit purchases. Remember, as far as double entry is concerned, the left and the right must be the same. So the debit leg and the credit leg must be the same. And therefore, there's no dispute that the credit side, it must be $40 so that both leg, as far as the double entry, will be balanced for the purpose of the trial balance. And in this instance, it doesn't make sense to debit purchase accounts $80 because instead of correcting, we are actually making another wrong entry in that sense, right? Because two wrongs doesn't equals to one right. And therefore, because of that, it is wrong to debit with a values of $80 for the purchases, and it's also wrong to credit suspend account of $80. And therefore, the answer will be C. C will be the correct answer. With that, we come to the end of part 1. Let us now do an overall quick recap. So back to the LO once again. You can see that over here we have 3 LO. On start, we understand the limitation behind the TB, right? We recognize why a balanced TB doesn't guarantee accuracy, even though debit and credit on both sides, the values are the same. Next, we talk about identifying the errors and classifying these errors that is not being reviewed by the TB, right? We talk about things like the omission, the commission, principal, compensating error, and complete reversal. And we are able to provide example. We talk about a TB itself is not being able to detect wrong account use. A TB is not being able to detect wrong amounts recorded on both sides. TB is not being able to detect entry that's completely left out, or vice versa, recorded twice on a specific entry. And we also talk about the reversal of the entry. So with that in mind, we establish whether it is understated or overstated as a result of all this error, and we use the necessary applications to adjust all this entry accordingly. For part 2, we are going to dive in to more complex rectifications or adjustment entry to correct further error. So if you enjoy this lesson and you want to dive deeper into more accounting topics, come and learn with us at A1 POA. You have taken the first step by watching this video. The next one, join POA to level up your knowledge from 0 to A1. Master POA with confidence. Don't forget to like, share, and subscribe for more accounting tutorials. You can also reach us on WhatsApp. Details are flashed on your screen for enrollment information. This is Lawrence from A1 POA. See you in the next lesson. See you in part 2, correcting of errors.